Hello students, I'm Vipul Mittal, and in this session I will discuss what are the fundamental qualitative characteristics of useful financial information. Now, the objective of general purpose financial reporting is to provide financial information that is useful to investors, lenders, and creditors. Now, when do you say that financial information is useful? Financial information is useful when it has certain fundamental qualitative characteristics. These fundamental qualitative characteristics are relevant and faithful representation. So if financial information is to be useful, it must be relevant and faithfully represents what it intends to represent. Now, when do you say that financial information is relevant? So if it is capable of making a difference in the decision of the user, you say that financial information is relevant. That is, it has predictive value and confirmatory value or both. Okay, what do you mean by predictive value? That is, financial information can be used in the process of predicting future outcomes. It can be used in the process of predicting future outcomes. For example, current year revenue may be used to predict next year's revenue. Now, when do you say that financial information has confirmatory value? When it provides feedback about earlier evaluation. So earlier you had predicted that this year's revenue would be $1 billion. So it provides you feedback about your earlier prediction, about your earlier evaluation. When financial information does this, it has confirmatory value. So current year revenues are actually providing you feedback on your earlier predictions. Next fundamental qualitative characteristic is faithful representation. So financial information should faithfully represent what it intends to represent. And now, when do you say that there is faithful representation? When representation is complete, neutral, and free from errors. What do you mean by complete? For example, if you're presenting financial information for a group of assets, then it is complete when you include the description of all the assets. You also present costs, you present the accumulated depreciation, you present the carrying amount, you present the fair value if needed. So you include all the necessary information to ensure that representation is complete. When do you say that representation is neutral? It is without bias. You're not emphasizing certain things or manipulating certain things or de-emphasizing certain things. No, it is without bias. Free from error. Free from error does not mean that financial information is perfectly accurate, but actually it means that the process that you have used to produce the information is correct. For example, if you have to calculate fair value of an asset, you have used the right method, proper method for calculating the fair value of that asset. If depreciation has to be calculated, you have used the right method of calculating depreciation. It is free from error. So there are certain fundamental qualitative characteristics of useful financial information, that financial information is useful. These are relevant and faithful representation. If these two are not present, relevant and faithful representation, then financial information is not useful to investors, lenders, and creditors. All right, students, I hope this is helpful. We'll connect again. Goodbye.